The campaign is also watching Wall Street closely. The Dow Jones Industrials have lost 200 points twice in the past 3 days of trading. It is a reminder that the economy is still the #1 issue in the election. Rebecca Jarvis is here. Good morning.
Morning.
So what's happening in the markets?
What's happening in the markets right now, $500 billion in value has been wiped out in just the last 3 days as far as the stock market is concerned. At the root of this is earnings. It's earnings season, and a number of major multinational companies from DuPont to United Technologies, 3M, have come out recently and said, we're not doing as well as we thought we were doing. 90% of the companies that have looked at what's going to happen in the future have given negative guidance about the future. And at the heart of that negative guidance is this fiscal cliff, the $600 billion in tax hikes and spending cuts that are set to come at the end of this year if Congress doesn't act. Those things are hanging over all of corporate America because they can't plan for the future. They can't determine with that level of uncertainty what happens next for them.
And we're showing here what this fiscal cliff means for everybody. It could mean $2,000 more for family, government programs cut, the jobless rate go up. That's the uncertainty that's also hanging over Wall Street. Can it change things? I mean, we know Congress and the president are not going to do anything until way after the election.
Exactly, and that's part of the issue. I mean, you've heard it from J.P. Morgan, you've heard it from Goldman Sachs, and I hear it every single day from business leaders. With $2,000 coming out of the average American family's pocket in terms of their tax burden next year, if we go over that fiscal cliff, all of a sudden that changes things. People are already cash-strapped in this economy. If that money goes out, all of a sudden, they don't have the ability to buy the things that are helping to generate business and jobs in this economy.
And there's a general global slowdown in economies of everybody across the globe.
Absolutely. You have it in Europe. You see it right now in China, which has slowed down. Those two factors are also, I mean, when you look at the companies that have come out and been particularly negative, they are the big multinationals that have exposure not only here, but need to see growth elsewhere in order to recover fully as well.